Hello, my name's Matthew Kidman and we're going down to the small end of the market today, microcaps. About $500 million market cap or lower, and as we know, good things come in little packages. As we also know, it's easy to lose small things as well. Joining me to talk about the microcap market, we've got Shane Fitzgerald from Monash and we have Dave Keelan from Ellerston. Welcome, gentlemen. Hard one, Shane, because it's a big marketplace. There's lots of them.
Absolutely.
How do we get our universe down tight so we know what we're looking at? How do you
Well,
find those stocks?
I wish there was a silver bullet to this question, but there just isn't. It's doing the hard yards, wearing out the shoe leather and having lots and lots and lots of meetings, finding what the opportunities and comparing them against one another.
There's probably 1,000 companies. You can't see all of them.
There is. What that means is you can't look at everything. So you've got to look at what you can look at and compare them against one another and then work out what's best to spend your time on. That's the key.
Okay, Dave, you got something a bit more
Yeah,
scientific about it, or you just got to go everywhere?
we think there's around 1,400 stocks in our universe. 400 of them can be wiped off straight away just through being not relevant. We run a quantitative screen every week to look at stocks that are covered by brokers, then one screen at stocks that are not covered by brokers. So that helps us bring the universe down, and we do a lot of travel. We do around 300 to 400 meetings per year, and yeah, it is shoe leather and hard work.
Okay, so what's the trigger? What makes you go a bit deeper and then say, yep, we're going to buy this? What are some of the things you're really focusing on?
We're looking for a clean balance sheet. We're looking for pretty good cash flow. And we're looking for a way to understand where the earnings are going to go, and a management team that are committed and that are locked in via stock or via some form of STI and LTI plans.
And how important is growth? Because we can go and buy big stocks and get the yield. Do we need growth?
We need growth in the small end of town because to grow they need to be relevant. There's a lot of small value stocks that are value traps, and the idea is that a micro cap needs to grow to a small cap, to a mid cap, and if it's not got growth, then it's a perennial micro.
Shane, is there a couple of things that you...
Well, at Monash, we're always looking for companies that are going to go through a step change in their prospects. I mean, the reason you hunt down the microcap space is you're looking for something that can really, be a multi-bagger. Otherwise, what's the point given the risk? So for us, it's trying to understand the opportunity that the company's looking at. If it's just doing something other companies are doing, that doesn't rock our world. So it's understanding the opportunity that the company's looking to execute upon, but above everything else is getting a really strong feel for the management team, because execution is everything, and the management team is obviously what drives that.
Drive the bus, but you said one word there that's relevant to that, and that's risk.
Correct.
You're at the risky end of the market. So things like biotechs, step changes there, both up and down.
They can.
Is there areas you just knock out and say, well, that's too risky?
Not really, because it comes down to the understanding what the opportunity is. And often that's captured in the price in terms of when you're getting in at and what you're looking for. The biggest risk or red flag that we want to be looking out for is time. Time is a big issue for microcaps. More often than not, these companies aren't making money or cash flow, so they've got a burn rate going through their through their cash.
Sure. They're running out of money.
They're going to run out of money and they're going to be coming back to the market. And even some of those that do have the positive cash flow, if it's going to take a long time for them to execute on the step change that we're looking for, is the market going to be patient enough for that? So it's a difficult...
a lot of timing
There's timing involved in all this as well.
And at the small end of the market, which we all operate in, we all love to talk about red flags. Shane just mentioned it then. What are some of the red flags in these very small companies that you should be aware of?
CFO turnover, that's a huge one. You want to see a CFO that's there and fully understands his working capital and his cash flow, so that they get a good sense of how the business is moving, because when they start to grow, that working capital can really cause issues.
So we don't want them leaving on a regular basis?
No, we want them staying, we want them locked in, and we want them and the CEO to have a very good kind of brotherly, sisterly relationship.
Okay, something else? You're worried about balance sheets, you're worried about cash flow, which Shane's brought up?
Yep. Balance sheet, generally our portfolio is net cash, so we have one or two companies that have debt, and it's for a very specific reason, so we're happy to have more cash than any in this time of the cycle.
So not a lot of debt?
No, if any.
Okay, all right, so why do we actually hang around this end of the market? Companies go broke, companies never make it, as Shane said. Well, why would you hang around this end of the market? What's there? What's the incentive?
It's fun.
It's fun.
It's fun. You get to
Work's not supposed to be fun.
You get to actually see a business grow into something relevant in this marketplace, in the economy, and that for me is interesting.
Or is it what Paul Kelley says, from little things, big things grow?
There's an element of that too. As I
higher
say,
growth.
as I say to my friends, it's relatively easy to find a $100 million cap company that could come a $2 or $300 million company. It's bloody hard to find a $7 billion company that's going to come a $14 billion company, right? But there's also risk associated with that because the $100 million can come a $20 million company just as easily, right? So for us, when we go down in the microcap space, the other issue is liquidity as well. So often you really got to be confident in the company you're investing in, really trust the management team, because once you've invested in these things, it's kind of like a marriage. You're locked in. And if something goes wrong, exiting the positions can be very difficult. So, we have maybe 10 microcaps in the portfolio and we kind of keep it managed at that rate. And we wait for these companies to develop before we lift the weights in these stocks. So it's a very measured approach to investing in this space.
Okay, here we are, towards the end of 2019.
Yep.
Some areas with some potential or even some named stocks that are microcaps?
Yeah, look, we don't tend to focus on in or out different sectors, be it fintech or biotech or whatever. It's all on a case-by-case basis that we're looking at these things. And as I said, getting the feel for the management team and the opportunity that's in front of them and where we're prepared to back that.
Okay, what about you, Dave? Is there some area that you think is ripe at the moment that we should be looking at?
Yeah, there's one name that we like at the moment, and that's PointsBet. IPO'd not too long ago, it's done really well.
Online betting?
Online betting in the US as the states bring in online gaming. It's a $17 billion potential market and they're a good number 4 player at the moment. There's plenty to grab and they're trying to get as much as they can.
PointsBet. There you have it. Microcaps, they're risky, but once you get married, let's hope you don't end up getting divorced.